Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds to 9 o'clock, with news the global financial system is buckling under the explosive implications of an expanding virus threat. The world is quickly moving to lockdown travel. New Zealand's effective closing of its borders is just one of many similar actions taken elsewhere. The trigger seems to be that Europe is now the epicentre of spreading infection, and the US is now the largest risk. Monetary authorities are doing what they can, even if these actions can't solve the underlying problem. The Reserve Bank of New Zealand has slashed its official cash rate by 75 basis points and signalled that the large-scale asset purchases are the next step. On Thursday, the New York Fed raised its support capacity by $1.5 trillion to reassure markets it would provide liquidity for banks and other financial institutions as they freeze up. And on Friday, they engaged in more than $100 billion of that support in overnight repo activity in US Treasuries. And they hit $55 billion with another $45 billion for mortgage-backed securities. All up, that's another new all-time record, and the first time ever this has been over $100 billion in one day. It is an indicator of an extreme stress in the US financial system. And the Bank of Canada released a range of measures, including a rate cut to support their economy. And the Financial Stability Regulator has slashed their domestic stability buffer from 2.25% to 1%, freeing up more than 300 billion Canadian dollars of bank lending capacity. Germany announced new fiscal support measures and shut its borders, and Japan is readying large new measures too. In China, they've added $80 billion in liquidity support for their banking system overnight, and they've cut their reserve ratios, releasing $125 billion in lending capacity. A rate cut is expected there soon too. China may be getting back to work, but their new problem is that lack of customers as the rest of the world shuts down. China's back-to-work status is about the only bright spot in a darkening world. In Australia, they're preparing for 4 million people being infected. Their Reserve Bank is supporting its markets with much larger liquidity injections, reportedly raising in the past week to over almost $9 billion. So lots of bureaucratic action, but nothing that will save any economy. The US Treasury 10-year yield is rising, which is an odd move in these times of stress, but buyers are hard to find, it seems. It's now up to just 0.98%, which is a 24 basis point rise in a week. Gold has fallen sharply, down to $1,530 an ounce. That's a stunning weekly retreat of $140 an ounce, or 9%. And US oil prices are marginally softer overnight, just on $32 a barrel, with the Brent benchmark just under $34 a barrel. That represents almost a 25% drop in a week as demand growth prospects vanish, and the Saudis and Russians square off in a power play. There are reports that the Saudis are selling oil at $25 a barrel to undermine Russian sales. And the Kiwi dollar is starting the week sharply lower. In fact, it's lowest since the GFC in May 2009, mainly on a rising greenback. It's now at 60.6 US cents and a 5% devaluation over the past week alone. The weekly fall is a very chunky 3 cents. On the cross rates, however, we've firmed sharply against the Aussie dollar, which is taking even more of a battering, starting the week at 98.6 Australian cents, and that's a 3 cent rise in a week. Against the euro, we're softer by 1.5 cents for the week at 54.6 euro cents. That means our trade-weighted index is now at 67 and a 2 cent devaluation for the week. That represents almost a 7% devaluation over all of 2020. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.